Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing how to trade the New Zealand dollar. New Zealand's gross domestic product is largely derived from the international exports of milk powder, butter, cheese, meat, edible offal and lamb, as well as the sale of beef. They also include logs and wood, crude oil, cereals, flour and starch. It has an extremely efficient agricultural system. Its exports rose 4.8% over the previous year in December 2019, after rising 7.3% in November. Exports to China rose by 5.8%, and now running at 18% of its total exports. And while it is not as exposed to the same level as Australia to the coronavirus crisis in China, it has seen a perceived risk to the market, and where the NZD-USD decreased 0.39% to 0.6463 on Friday, January 31st, which was down from 0.6488 in the previous trading. The New Zealand dollar is one of the 6 major currencies, so let's take a look at the daily chart of the NZD-USD pair and try to find some directional bias. In example A, we can see that the daily price action has been largely contained within the resistance and support lines as noted on the chart. However, when price action failed to reach the resistance line at position A, we see a pullback lower in the pair to where price action has pushed below the support line at position B, or 0.64870. This push lower coincides with the sentiment and risk pertaining to the outbreak of the coronavirus. It is highly unlikely that this outbreak will be contained anytime soon, and where no vaccine has been yet made. Therefore, we can presume that the price action will be driven down to the 0.640 key level, and if breached, we may see a continuation down to the support line at position C, and which should be considered a target. To try and back up our theory, we're now turning our attention to example B, which is a daily chart of the New Zealand dollar against the Japanese yen. We have a similar situation in this case where price action has been contained within an overall lower level of resistance and to periods of support which go back to May 2019. We are more interested in the recent activity as defined by position A. Price action failed to reach the resistance line at 73.40 on 2 separate occasions. Recently, we can see that the New Zealand dollar has fallen against the Japanese yen and breached the support line at position C. And where price action coincides with the weakening of the New Zealand dollar due to its dependency on exporting to China, coupled with the fact that it is being bought because of its safe haven status. Traders should be looking for opportunities to short this pair on a preferred time frame, and a target should be sought around the position which is the 66.81 support line which held previously. Traders should be looking out for New Zealand building permits and employment figures, which will be carefully analysed for directional bias, but the key event to consider will be how the market responds to the Chinese market's opening after an extended Lunar New Year closure. This coincides with the Wuhan coronavirus outbreak. Trade balance and PMIs are due to be released. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.